Hey guys, welcome back to Smart Trader. This is Dias Paul, and thank you so much for all your likes, comment, share, and subscribe to my channel. If you're a new viewer, definitely watch all the videos, and if you're liking those videos, then hit that subscribe button. And for the ones who wants additional services, always WhatsApp 7892652481. And for the ones who wants to be part of my secret Telegram channel, you can click the link in video description and open your account to be part of my learning channel. So without wasting time, let's discuss about options trading. Like I promised, we will discuss about the basics of options trading. So this is our first learning video of options trading. So I will talk about the introduction and few logic about options trading so that you understand the foundation and the basics of it. Slowly in other videos, I will teach you regarding in depth of these things so that we can learn it step by step while I am learning. So options trading, now when you hear this word options trading, you may get scared or something. Okay, what is this options trading? So many technical terms, it's very difficult. Even I felt the same initially, but as and when I learned few theories about it and when I started practicing it, things are getting easy for me. So don't worry, as and when we learn each and every terms and new ideas and concepts, one day it will become easy for you too. So hope after few years we will be a better options trader. So now let's go to the slide number 2. So I just took a small example. This is one of the very good example used. So I thought I will show this in a picture to make people understand in a very simple terms. So what exactly is this option? We have traded in this equity, right? So equity in the sense, see, Reliance stock we have traded. So we buy the company of Reliance. We buy so many shares in Reliance at a price of 1065. So this is equity. Okay. So what are these options? The options look like this. Reliance April 1000 CE, 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 and we also have something called PE. Okay, so these are all our options. So this is an equity. So what is this option? Okay, what exactly is it meaning? So for that, now let's take an example of wine. So most of you guys would have seen this wine, okay, grape wine. So this wine is made out of grapes, let's say black grapes. Okay, so wine is derived from grapes, okay, derived. So same way options is derived from securities. What securities? I showed you Reliance share, right? Equity, or Infosys, Maruti, or else index. Okay, that is Bank Nifty. Any index you see there, that one also will have an options. So this is made out of this or let's say commodity or currency, whichever it is derived from that. This one's value. Okay, so the help of Reliance value, one option is created. With the help of Infosys value, one option is created. With the grapes, we created the wine. Same way, options are derived from underlying assets. That means it is derived from the securities, Reliance, Infosys, or Bank Nifty, like that. Okay, that is a very simple example which I can give you guys. Now, so therefore, they call it as derivative market. So these are traded in derivatives. So they call it derivatives. So it is simple. It is derived. Okay, derivative, whatever we call it. So it is derived from something. So it is traded in derivative markets. Now let's go into a few things. Okay, a few things like um, premium and what are these. Now you see, this is Reliance. Okay, the price of Reliance is 1065. But you see, this is options of Reliance, one of the options of Reliance. Don't get confused with this words 1000, 1200, 800 and all. This and all we will discuss later, strike price, what are call option, put option and all in other videos we will learn in depth. Now let's not get confused. So this is how the option looks like, and see the price of this option 150 rupees. See, this is 1000 rupees, this is 150 rupees, this is 53 rupees. Okay, so what are these prices called? So they name this price as premium. Okay, so the price of the option is called premium. So the premium of this option is 58 rupees, 10 rupees. Example, see, we take an insurance of 5 lakh rupees. Okay, so I took an insurance of 5 lakh rupees, but how much am I paying? 10,000 rupees premium, right? So you pay a premium, not the full amount. Same way, I'm just giving a small example, that is, so same way Reliance is 1065, but the premium of Reliance is 150 and 53 and so on. Okay, for Infosys, let's say it's 652 rupees, but the premium of Infosys options is 8 rupees 75 paisa. Okay, so when you buy it, you buy like your futures lot size, but you have to pay only 8 rupees, 1200 into 8. Okay, in terms of future, you will take 1200 quantity. Okay, you take 1200 quantity into stock price, right? The whatever future price will be similar to stock price, that is equity. But in this options, you pay only premium price. You see, that's the reason a lot of people trade in this options and all that. So if they lose their money, also they lose how much ever they invested, 8 rupees into 1200, whatever they lost. Okay. So normally they say options is low risk. Okay, when I want to see how exactly it is. So once I experience that, I will confirm you and explain you what it is. But as of now, what I read is they say it is low risk. Cool. So that is more about the premium. So you pay only so much. So 8.75 into 1200 rupees is what you buy on a normal value without leverage. With leverage, whatever margin you get on your options trading based on your broker, you will get it. Now, this is basically a contract. Okay, options is nothing but a contract. Now, let's say I want to buy something, and you have, let's say you have 5 kg of rice. Okay, so I want to buy the rice. So I will book your rice by saying I'll give you, let's say the cost is 100 rupees, but I will pay 10 rupees and I will book your rice saying I will buy this in the future for 100 rupees later. Okay, so 10 rupees I will pay as a premium. So same way, it is a contract. Option is a contract of either buying some security or a stock, okay, share, or else selling a stock. So it is like if you feel that the stock is going to go up, the company is doing good and something, then you try to buy the options. Same way you try to sell the options. So it is basically a contract. Now talking about the expiry, okay, you know stocks don't have expiry, okay, until and unless the company is there, they will be there. But futures, you know, the expiry is monthly, okay. Monthly expiry means like every last Thursday you have expiry. Same way, the expiry of option also has last Thursday of the month, okay. For April, April's last Thursday. For May future, May options, last Thursday. Also, they have something called weekly expiry. Okay, I'll just show you the example here. So if you open and cross check here, this is monthly April, you see this April and all that, and this is weekly 1st April. So this is April future options. So if you check the expiry below here, what is it? So it is 30th of April, right? So that is the last Thursday. You can check your calendar. Okay, so it will be a last Thursday as your expiry for monthly expiries. That is same thing with future. Same way, you have something called weekly expiry, an option which will be open for a week and will expire on Wednesdays, I guess, right? So 1st April would be Wednesday, I guess. So every Wednesday, your weekly, you will have the date confirmed here. What is the expiry date? So 1st April, this is 1st April expiry. Like that, you will have different Wednesdays expiries. So you can check the name, okay? And how do you search for this option? Same way, just type, for example, Reliance stock name and then just put April futures. If you're trading in the April month of April, search for April futures, and then you will have the CE and PE. So CE is nothing but call option, PE is put option. Don't get confused, we will discuss later. But this is how your option looks like, and strike price you have to find out on which people are trading. All that we will do in the future videos. So now, what happened to this? Okay, so now let's discuss about, so anyways, like I told you, call option, put option I already told you, so we will discuss. So according to, if you're planning, you know, in simple terms, I'll tell you this is nothing but buying, okay. This is in terms of selling. So if you feel the stock is going to go up, you will prefer call options. If you prefer, you'll buy this options, and if you think the stock is going to come down, Reliance is going to come down, example, you will buy put options. So there are 4 possibilities in options. So don't confuse now. It is a little bit different from our futures and stock. So there are 4 possibilities of buying and selling. so don't look into that. We will discuss later part this one. Okay. And last one, I would say connection or logic. The connection and logic is nothing but, see, it is, I told you the wine is derived from the grapes, right? So same way this is derived from some stock, let's say Reliance, or let's say index, Bank Nifty index, or whatever, reality index, or whatever index or commodity and all. So this one is connected to that underlying asset. So if Reliance is going up, the connection is the option CE will go up, and if it is coming down, then people will buy this options PE, it will come down. So it is related to the underlying asset. So you need to concentrate on that asset or Reliance company if you're buying the options of Reliance. Okay. So this is connected directly with the underlying asset. So stock or commodity or currency, whichever you are looking at, this is connected to that. So based on that movement, this movement of this premium movement also will be similar. If your stock is moving like this, the premium also tend to move like that. Okay. If your stock is going up, your premium tend to go up. So people try to make money. Or if your stock is falling, premium goes down. So people do buying this put option. Okay. So that is the logic which we will discuss further. Don't need to worry. Just for your basics, I just told you. Talking about the brokerage, okay, because brokerage also is important. So I just checked the brokerage. I have not traded much in options, but I'm checking the calculator as a basic check. So if you do the basic check over here, uh, so this is intraday equity. Okay, this is your futures and this is your options. Everywhere the turnover is let's say 8,40,000, 8,40,000. Okay, so now, so if you see the brokerage is comparatively higher in terms of options here, because you see the STD charges, if you see, is 44, here it is 220. So the percentage is higher in terms of options, and exchange transaction charge also is higher here. Okay, so percentage is higher. So GST will be higher because the charges are higher, and this remains same, and therefore total charges are higher. So 28 paisa goes here, here 1 rupee 91 paisa goes. So I feel the options is having higher brokerage compared to our futures or let's say equity. So anyways, that was more basic about our options. So in next video, we will be learning more about call option, CE, and put option and all those concepts. Then later we'll be learning how to buy and how to, what is the strike price, how to find out, and all those basics we will cover. What are the orders we need to put, and what are the risk involved. So many things are there. So let's not confuse that in one single video. So understand this concept little more. You can Google search, read other articles for a better understanding, for your own understanding, or watch this video again and again for a better understanding. So hope this video helped in your knowledge. So if it helped you, then definitely hit that like button and also share this with all other beginners in other groups. See you soon in my next video. Till then, take care. Bye bye.